2020 was nuts from our perspective.
Yeah.
The data in 2020 was wild to look at. It was really crazy. The US was alive in 2020. The rest of the world was pretty shut down.
Hey, everybody. Welcome to another episode of Landlord Lens. It's me, John, as always, joined by Ryan Saylor. Hi, Ryan. How are you?
Doing well, John. How are you today?
Doing great. Well, you guys all know me. I'm from TurboTenant. Ryan, where do you work?
I am over here at Beyond, formerly Beyond Pricing. We prioritize and optimize revenue and pricing strategies, mostly for short-term rental operators, but we also dabble in the midterm segment as well.
Awesome. Cool. And you guys, if you're watching TurboTenant, probably know we're long-term folks. So this is really a good bridge conversation. And we know a lot of our users certainly have mixed portfolios, depending on where they've opted to buy or the strategy they're pursuing. And so, I want to talk about a little bit about 2025 relative to the pricing trends out there for short-term.
Yeah, 100%. And I mean, we're in September right now. So when I think about, at Beyond, we really support operators globally. Top regions are really going to be like North America, Latin America, Europe, Australia. We support, markets in Asia, Africa, the Middle East as well. But for the most part, a lot of where we've been able to expand over the past 10 years or so are in some of those markets. So we've really seen a lot in 2025 as far as overall trends so far. But for most of North America and for Europe, a lot of the summer markets are coming out of that peak season right now. So short-term rentals give you insane seasonality, depending on what market you're in compared to long-term. That's one of the big differences. So it's kind of a cooling off period for a lot of operators. Depending on the market, again, like ski markets are definitely starting to pick up, start to focus on those winter prices and strategies. But yeah, it's been an exciting year so far. And I'm glad that, there was a bit of a chaotic Q1 for everybody, but things have definitely normalized on our side. And we've seen some positive trends across the board.
Very cool. So it's cooling off in general in North America and Europe, but you got these kind of ski markets. Well, one question I have that I've been curious about with ski markets, we're from Colorado in TurboTenant land. About how far from the resort does a ski market really extend?
Yeah, great question. So actually, let me break down a little bit of how we've built Beyond over the years.
Yeah.
We were the first dynamic pricing tool specifically for short-term rentals or rentals in general. Before us, it was like the hotel world, the airline world. So we said, hey, a lot of people are just flat pricing, $200 a night, high season, $100 a night, low season. Obviously, that doesn't really align with true market demand. There isn't the starting day of high season and ending day. It's all shifting, day of weeks, different values, things like that. So we initially set out to build that, and we started pulling in a lot of data from the market, scraping Airbnb, Booking.com, VRBO, and then getting users to connect their platform with their listings to then be able to see some of their data trends as well. So we actually handcrafted each market that we're live in. So we didn't write a set of rules with the data and say, cool, go automate everything. And, someone in Tokyo can go ahead and start pricing today. And we went through and literally on Google Maps, handcrafted, okay, we see a cluster of short-term rental properties here. We literally call them clusters. That cluster is part of a broader market. Breckenridge, for example, we've got a cluster that is actually true ski in, ski out. The only way to see that is really looking at the map. You can look at amenities and things like that, but the value of being in the village versus ski in, ski out is a big difference on pricing. So ski markets, typically it's like the ski in, ski out, depending on how the resorts are laid out, that's prime time. Then you kind of, head down into the village, and then we'll see some outskirts areas, but most ski markets aren't that big. There's just pretty dense clusters of rentals, whether or not they're short-term, mid-term, or properties that people develop.
Interesting. Okay. So talking about Breckenridge, there's a town down the highway called Alma. It's about a 20-minute drive. You would not classify that as a ski market.
We would, but
Okay.
it's
different.
It falls into our classification of ski market, but that far away, we're going to look at the rentals in that market and the different shifts in supply and demand. We're not saying, hey, ski in, ski out Breck is at 100% occupancy. This cluster in Alma's at 50% occupancy. We think you should increase your rates. We're going to wait and see, because we know There's people who are less willing to stay there because of the travel or whatever they have to do to actually ski.
I see.
That can totally flip. An interesting thing, the hardest markets to price in are like ski and ski out markets that have a lake. Tahoe is a great example because it's like ski and ski out is so valuable in the winter, but then like completely not valuable in the middle of summer. Whereas like being on the lake is very valuable in the summer. It's okay in the winter, but you want to be closer to the resorts. So the seasonality of those is fascinating, and it all comes down to like coordinates of where the property actually is.
I see. So to kind of restate the narrative a little, before you guys, especially for short-term stays were really primarily hotels, motels, right? And they were doing the same thing airlines do, which is super dynamic, very responsive, but proprietary. You guys have taken that same idea, this highly responsive, highly live, real-time, data-informed approach, and made it available to more independent short-term operators.
Yeah, absolutely. So we really built the platform for like professional operators. There are operators around the world who are managing anywhere between 100 to 15,000 properties in multiple different markets. So we built for like that enterprise level. And then very quickly we were like, yeah, totally. An Airbnb host with one property or like an ADU in the backyard totally could use our tool too. So we've kind of built and optimized for both. The key difference in the shift and why we couldn't just take hotel and airline tools and just rinse and repeat on this side is because when you think of a hotel, for the most part, let's say there's 100 rooms in the hotel, it's a box of 100 rooms, and you maybe have 4 to 5 different room types, but most of them look exactly the same.
Yeah.
So we can price all those units the exact same, sell them, and then basically just try to fill up the box. With a short-term rental portfolio, house A versus house B, even if they look exactly the same furnishings, they might have different reviews, they might have a different owner. One might be literally one house closer to the beach. You never know. So we had to build a tool that basically started with the inherent value of that property based on historical data or what we can see in the market. And then we uniquely price it using factors in the market. So if we know a house on average is worth $500 a night, that's kind of our starting point. And then we'll say, all right, it's low season, but it's a Saturday. So like, let's take down price for low season. Let's increase the price a little bit because it's a Saturday. So that was like the big difference in our shift. That's been super helpful because now I think compared to hotels and airlines, as you mentioned, like pretty proprietary, definitely holding that data close to their chest, we're able to see really informed market data because if a property is available or not available, just ones and zeros for that specific day. But you could go shop a hotel online right now, a 500-room hotel in Denver, and you might be able to book a room. That could be their last room left to sell, or it could be their last of 400 left to sell. Only the hotel knows that. You can't see that as a competitor or as a guest. But for a short-term rental, I can go shop on Airbnb. Like, my neighbor's not available tomorrow night. I could probably take my rate up because if people are looking, there's fewer options.
Oh, interesting. Yeah.
So that's been key success for, I think, the industry. And one key data difference that makes our data a lot more informed than hotels and airlines, but certainly makes the pricing challenge a bit trickier.
So you get transparency basically to the guest experience when they're booking in a way that hotels don't offer.
Yeah.
Cool. And you guys have been around for how long?
2013.
2013.
So
wow.
12, 13 years.
Gotcha. Now, I'm going to share something that I believe about the short-term rental market. You tell me where I'm wrong.
Yeah.
My understanding is short-term rentals became extraordinarily popular around 2018. You can date me either way on that, but they became super popular as investor assets at that point. There was this crazy rise through 2020, 2021, right, where rates, ZERP snatched them all up and cash flow them quickly, all those Instagram folks. And then it's kind of cooled off. I've certainly seen regulations in Colorado pop off, right, as local communities have clamped down. And it's become harder and harder to find those cash flowing deals, which is a very similar story in long term. Where is that story wrong?
I think, so starting with the 2018 piece, I agree with you to a certain extent. I think for most people, Airbnb took the moniker, like, let's book an Airbnb, let's take an Uber, give me a Kleenex, that type of thing. And that, I think, for most people opened up this world of short-term rentals, sometimes for specific markets, like a lot of urban markets where Airbnb's sort of like their first foray, San Francisco, Chicago, New York, Tokyo. There have been legacy short-term rental markets around for hundreds of years. When you go over to Europe, there are hardcore legacy businesses that have been in operation in some way, shape, or form for short-term rentals for a very long time. The market over there from a tech perspective is very fragmented, weird regulations all over the place. So like, yes, 2018 and then 2020 were sort of these bumps, but like there are large operators in the US who do not sell on Airbnb. They have their own website, and it's families that have been going to the Jersey Shore for 15 years, and they book the same house with the same operator or realtor, whatever it might be. Same with like the Florida Panhandle. The Florida Panhandle is one of the largest markets in the world. When the world shut down for COVID, Florida banned short-term rentals. It was the busiest month we've ever seen in the Florida Panhandle in like June of 2020, because everybody was like, no, we're going to go and, get a big house. It's going to be super cheap. We're not spending money elsewhere. So there were certain rises, but the professional side has been there. And like Airbnb doesn't account for, especially outside of the US, Airbnb doesn't account for the majority of short-term rentals. It's all on either another OTA like booking.com, or it's direct bookings where you Google, Mallorca short-term rentals and you find a local operator. Those have been around for a very, very long time. So there's kind of been different, historical jumps in awareness. And now we're certainly at a place where I keep an eye on the hotel world. That's where I came from before Beyond, like 6-7 years ago.
Okay.
And I keep an eye on it, like conferences and stuff. Like, what are they talking about? And it's always like, short-term rentals are here, but they're not really a threat. And while I agree, I think it's such a lame take ultimately, because there are people who are choosing between a hotel and a short-term rental. Like those people exist. But most of the hotel world is just like, it's all Airbnb. We can write it off, whatever. So that's kind of how I see the market overall. So I don't think you're wrong, but there are different pieces in history where we did see pretty big jumps. And yeah, 2020 was nuts from our perspective.
Yeah.
The US was alive in 2020. The rest of the world was pretty shut down for short-term rentals. So it took really quite a few years for like urban markets to come back online fully, and then, Europe and things like that. So it was, the data in 2020 was wild to look at. It was really crazy.
Very cool. Awesome. Okay. So thank you for that little history lesson on short-term rentals as a category kind of emerging through Airbnb, claiming that category moniker.
Of course.
But they'd been around forever. I remember staying at a Hawaii condo when I was a child that my dad booked. So I get this idea. Sweet. So we got a little history on short-term rentals. I shared a little bit about long-term and how it's really hard to find a cash flowing property in a lot of spots, especially locally, right?
Yeah.
And so let's jump into 2025. We've been but called by our users who have mixed portfolios. And they're talking about short-term rentals and increased regulations where they have those short-term rentals, and bandying about the idea, hey, there's a hospital near this rental. Maybe I go to midterm and try to target that nurse group. Some folks with long terms are exploring short terms and hitting regulations that weren't there 4 or 5 years ago. So what are some trends you guys are seeing right now when it comes to the viability or maybe the fleeing of investors from operating as short term? And I'm talking here too about small guys, right? 1-5 property people.
Totally. Yeah, it's been fascinating. I think regulation is an evergreen topic for the industry, of course. Ever since I've really been paying attention to the industry and what's going on, it's always regulation. The one thing that I'll say is like, it's so dispersed and so different, like county by county, city by city, which makes it really difficult to understand as an operator, as an investor. And there are, organizations, associations, and companies that really try to push for influencing legislation. Certainly what we see, I think, for the most part, is something like a hotel lobby going against a short-term rental industry and market. It happens a lot in Florida. You can see some big battles in Florida all the time. Hawaii in general, but specific islands like Maui, they're kind of always going through different types of regulations. You see Barcelona has been in the news for the past year about like tourists and Airbnbs and supplies. So there's not a one size fits all, which certainly makes it difficult. But I would say in a lot of these traditional vacation rental markets, and what I mean by traditional is like Destin, Florida, Nashville, Tennessee, Taos, New Mexico, like less of the cities where there are housing problems. Those are going to be the markets that are typically easier to find a property that's viable from an investment standpoint, but also a market where there is a community there that can help you fight future regulation or changes to how short-term rentals operate. So I don't know if I would really be pushing for investment in like a major US city for short-term rentals. It's getting harder and harder, and your business can kind of disappear overnight just depending on what they want to do. And without having any sort of backing behind your business, like a community, like an association, it can make it really, really difficult. So it's definitely a pain point. It's never going to go away, unfortunately. And it's totally different, again, county by county, government by government. But it's something that we help people work around depending on what the issue is. To get even further into it, sometimes the regulations are literally a cap on occupancy. Sometimes it's a cap on how many bookings you can have per month. So instead of taking one 7-night booking, you would rather get like a midterm at 30, 40, 50 nights, something like that. So we help people navigate that strategy depending on what it is. I won't name names, but I've seen some people do some crazy things like, hey, I have 2 Airbnb listings, but it's physically 6 properties. So I'm almost booking in people like a hotel with a rate category or a property type and then filling them in. And the city is just, we know that they're just auditing Airbnb. So they see my 2 properties and that's it. I've seen people do that. Again, not naming names. I don't do that. They could check your taxes. I don't know. But yeah, for the most part, there's some workarounds. And I haven't seen that many investors totally lose out because of regulations. But it's probably the first conversation you should have when figuring out what market or even what type of market to look at.
Gotcha. It is the active regulations.
Yeah.
So you're basically making me go look at that terrible county or municipal city website?
Yeah.
Oh, God.
And thankfully, some people translate them. Like, there are so much in the US, there's probably 100 local associations, and they go back to those big markets. There's like literally one just for the state of Florida, but then they also have like local ones. There's definitely one for Colorado, but I know there's also like ski ones. So those people can typically help you translate.
Oh, interesting.
We find a lot of communities on Facebook, Reddit, anywhere you can get info as an investor or property manager. That's typically where people are kind of like, hey, yes, there's this regulation over here, but I'm not worried about it. Or there's this regulation, you got to register for a license, yada, 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 to help you kind of translate. But the best is really to go read the source material from the government, unfortunately.
Yeah. Yep. Bummer.
Yeah.
Oh, man. Yeah. I have been in several of those Colorado ones recently with my dad. We're looking around and golly, those websites aren't easy to navigate or understand.
Yep.
And they're very poorly indexed by Google.
Yeah. Yeah. Shocking.
Shocking. Okay. Even with all this regulation kind of restricting supply, I have no idea what the demand is today relative to, say, 3-4 years ago when everybody was talking about Airbnb yields. How are the prices? Like, are they stronger in North America, weaker? What's the situation?
Yeah. In the context of the past 5 years, I would say like totally market dependent, but 2021 and 2022 was really where we saw like market highs.
Okay.
On the year or on high season. It was the wild, wild west. I mean, thinking about like even summer 2020 was still pretty early, but people were traveling. And then into 2021 compared to 2019, I was seeing prices double, triple, quadruple.
Wow.
And for us, the way that users use Beyond is they have like one set base price for their property. It should be around the rough average daily rate that you're pulling in. It's really a way for us to kind of assign a value to the property. Let's say it's $500, but then you add a hot tub and we crank it up to $600. That's some of the data that we look at. But I was seeing people like go from 2019 to 2021. Let's say they were at $100 on their base price per night. That would double to like $200 in a year, that $300. And then what happened is like when we got into 2022, 2023 for some markets, property owners were used to this, investors were used to this. And then we saw, the rush of supply from investors in a lot of key markets, the decrease in demand as like for the US travel to Europe and internationally opened up. And so I think 2023 was kind of the first big constricting year. And then since then, we've kind of seen things stabilize a little bit. I would say we haven't really seen highs like 21 and 22, even 23 over the past 2 years. And so that's been a big focus. And also what we sort of report on is the blend of occupancy and then ultimately the rate that guests are paying. So successful revenue managers, property managers, investors right now in 2025 are sacrificing some of that rate year over year to get more nights booked to increase revenue year over year. Everyone wants to go in to 2026, for example. Everyone's going to go in, hey, just take my prices from last year, crank them up 10%. Let's see what happens. The majority of bookings for the world are made in the month of January or in Q1, if you look at it. So at the beginning of the year is when everybody figures out, oh, people aren't responding nicely to my increase in prices. I need to decrease a little bit. And so the game then becomes just sell as many nights as you can so that you're making more money year over year. So that's what we're seeing in 2025. Again, Q1 was pretty wild in terms of regulations, travel, tariffs. So those were some of the slowest months for the year. Also because everybody had set up their whole year with higher prices from last year, from 24. So now in September, everybody's had a chance to course correct, especially through high season for a lot of markets, which is great. And we're seeing ADR losses or ADR kind of be flat year over year.
What is ADR?
Average daily rate. So just the rate that a guest is paying, not the price, but like what a manager or host is pulling in. And we've seen that kind of be flat or like a little bit down, and then occupancy's up like 3-4% for the US overall. So that's where we're seeing some growth. It's just getting more room nights booked, but it's certainly stabilizing from the chaos of COVID.
Yes. Okay. Awesome. Something, as you were sharing a lot about the approaches investors are likely to take in 26 and have taken so far in 25, I'm struck by how much thought, effort, changes, adjustments that a short-term operator needs to do versus, I mean, a long-term on the other end, right? But midterm also, right?
Yeah.
Things like price adjustments. You've got business management stuff happening virtually every day, if not probably every week for most folks that are smaller.
Yep.
What are some questions you would recommend an investor ask themselves about whether they should be doing this or not?
Yeah, I think starting with your goals. I mean, is the goal to grow a rental portfolio? Is the goal to have 1 or 2 investment properties and cover the mortgage? When we work with hosts or anybody, I mean, sometimes a property manager managing 50 properties, they're operating on behalf of the homeowners. That would be the same if you wanted to invest in a property, you didn't want to operate it as a host, you pass it off to a property manager. When I talk to them and they're talking about owner management, obviously there's competing property management companies. They're trying to retain their owners and help out there. When I speak with them, I tell them to segment their owner types. Is this an owner, a homeowner that the house has been in the family for 50 years and they probably want to make some cash, but like they're going to stay there. They don't want 100% occupancy and wear and tear on the property. Then you can kind of deal with them that way and like handle their pricing, communications, give them what they want versus someone who wants to like literally maximize ROI on their investment. That's going to be more 100% occupancy, tank rate, run a promo, let's get this thing sold. So I think starting there with understanding what you want is a good way to figure out which way you should go. Because as you mentioned, short-term rentals are quite a bit more involved, not only from operations, but also just from pricing and strategy compared to midterm or long-term. But depending on the market, depending on the property, short-term rentals can be much more lucrative than a long-term rental. So it's kind of that risk assessment alongside what's happening in the market. You know, I'd be more keen to invest in a short-term rental property in Nashville, for example, than a long-term versus, I don't know, like anywhere in Ohio, I would probably go more long-term than short-term, you know? That would kind of be where my thinking heads if I was going to ask that question to myself.
Gotcha. That is really useful. So it's a balancing act on one end of should I format this investment as a short-term, midterm, or long-term? And it's kind of the scale of involvement, but also profitability, involvement and risk, I'd say, and also profitability.
Yep. Yeah, 100%.
Gotcha. Okay. Super interesting. And I imagine it would be absurd, probably, assuming, to go buy a long-term rental property in Breckenridge, right? To bring it back to Breckenridge again.
Probably. Yeah. Because what's happening there is with seasonality, like you basically have Q1 really as high season, a little bit of the holidays too, back in November, December to really maximize. So depending on how long-term you're going to go, you're kind of averaging out and probably losing a lot on that average daily rate in high season.
Yeah.
The benefit is that if you've got someone in, late spring, summer, then you're making money where, people probably aren't on the short-term side getting as much occupancy. So yeah, some of that give and take, just depending. And then I think too, one theme that we saw through COVID was a lot of people shifting from short-term to mid-term to long-term. Whether that was, just due to their own beliefs of what was going on in the market or a regulation thing too. We saw a lot of short-term rentals. No one from the government side knew what to do during COVID. So it was just kind of a scramble. But I think your ability to flex between short, mid, and long is an important consideration too. If do you have to go all in on a long term, or if the market changes in a year from a supply or demand perspective,
Yeah.
could you then easily flip it to short term, or is that going to be a pain for regulations, government, operations, whatever it might be?
Awesome. Okay, that's super useful. Now I'm going to ask one last set of questions that are hopefully a little more fun to answer.
Cool.
In the last 12 months, which short-term market has been the biggest winner? Most improved award goes to?
I'm gonna say Broken Bow, Oklahoma. That's a surprise for us. It's been a market that popped on our radar during COVID, and I was thinking for a minute there because the way that you can classify, market performance is it varies across the board. Like, is it new supply? Is it occupancy? Is it number of guests? Is it revenue, average revenue per listing? Now, in the short-term world, we look at a lot of like just pure booking velocity. How interested are people, no matter the price or the market, how interested are they in booking a rental in this market? So Broken Bow, Oklahoma was the winner during COVID, and it stayed really strong, which is kind of the surprising part. It's still a strong market today. It was one of those markets that I think certainly was popular before COVID. Big feeder markets being Dallas, Oklahoma City, Tulsa. I mean, when you think about it, so many people can drive there, so that makes a perfect market. Gatlinburg is another example. I think like 80% of the United States population is within an 8-hour drive of Gatlinburg, so it's like a perfect.
What? 80%?
It's crazy. Yeah. Like the stats of those tourist markets in the middle of the mountains or in the middle of the country is really, really wild because of how many people can drive there. And that makes it a lot easier than flying and a lot less expensive.
Oh my gosh. We got to go to Dollywood, Ryan.
I was there. I went in October.
Nice.
It was sick. It was really fun. We had one of our partner property management softwares had their user conference there. And that's what's fun about the short-term rental industry. Like when I go to a conference, I'm going to the Florida Panhandle. I'm going to Gatlinburg. I'm going to Scottsdale, Arizona.
Like cool spots.
It's niche markets. There's some in some of the big cities and then internationally, but yeah. Gatlinburg is a big one. Tennessee Mountains overall. Huge markets. So a lot of surprises there, but depending on how you want to look at it, like booking velocity is a fun one to look at because it's a strong market.
Yeah.
You could have a more luxury market that's getting high ADRs, but like 10 bookings a year. I don't know. Depends on what you want, but I want a lot of bookings if I'm operating a short-term rental for sure.
Yeah. Activity. Okay. Flip question. In the last 12 months, biggest loser. What has been the biggest downturn?
Ooh, probably like New York City. That's been a regulation battle for many, many years. Got pretty hardcore like a year ago, and it's been pretty tough to operate. We haven't seen any major moves in the market. I think a lot of big cities in general, you could say that for. LA was tough for a while with the fires.
Oh, yeah.
Chicago is pretty tight on regulations. Also a big hotel market in Chicago, so that one's pretty tough. Malibu, weirdly enough, you can only operate, every business can operate one rental, I think. So it's all just like posts peppered everywhere.
Yeah.
So yeah, I'd say the big cities are kind of always at a loss, but they get the biggest events. They get the most amount of people coming to visit the city. So that's kind of another consideration. But with general housing concerns always on the table, cities usually get hit first on the short-term rental side. Maybe a call out for Barcelona too. Tourists getting hit in the face with water guns.
Yeah. Oh my gosh, I haven't read those in so long.
Yeah, I think the water guns have stopped, but I've seen some like graffiti and things. We have one of our offices is based there, so we get a lot of the local insights, and it's a hot topic, but the market is still thriving. People are obviously still going to Barcelona, but I don't know. I've definitely reconsidered a trip because I don't want to get hit in the face with a water gun. And I get it. I'll go elsewhere in Spain. I just like Barcelona.
Oh my God. Wow. Okay, awesome. Is there anything we didn't talk about that you think maybe we should touch on really quick before we end?
I think we covered a lot. I mean, we didn't get a ton into like actual pricing and revenue management, which is great. That's all that I talk about all day long. But once you're in a property, actually operating it, looking at the pricing strategy, there's just some cool things that you can do. So if anybody's gonna jump into investing, especially in short-term rentals, go hard on revenue management. It's a discipline that we've seen grow a lot over the past couple of years. The same thing happened in hotels. Like 30 years ago, the front desk would set the prices at a hotel. They'd be like, all right, we're going to go with this price, and probably had some to pick from. Then it became like a growing function of like a reservationist in the back office, handling all the reservations, but also handling rates and revenue. That was kind of like 80s, 90s, early 2000s. You had like, oh, we actually need a pricing manager, and then kind of a revenue manager. And then you kind of had other like sales and marketing teams at hotels be absorbed into the revenue management function. So hotel leadership is like a general manager, a director of revenue management, like finance, and then ops. So we're kind of seeing the same level of growth as the revenue management and pricing discipline in this industry. But short-term rentals, especially compared to other tourism or travel industries, truly the wild, wild west. You can kind of do whatever you want. Technology is like exploding in every way, shape, and form. There's data everywhere. There's new techniques. And it's still it's still early innings. So there's a lot of opportunity to like make a splash, go hard, go check out a new market. It's a really exciting time, I would say. So always happy to chat revenue management and pricing, but it's kind of the boring stuff. So,
well, it's the boring stuff, but it's the stuff that makes you the money.
True.
Yeah.
That's what we love. That's why we're here.
Well, I love ending on such an optimistic note, Ryan.
Yeah.
Yeah. Really appreciate you hopping on and sharing what you got with our audience.
Yeah, absolutely. Thanks for having me. This was great. I'll be back next year with my hot takes on markets. I'll keep an eye on some of the crazy ones.
If you saw anything in this video you strongly agree with, strongly disagree with, leave a comment. If you'd never heard of Broken Bow before, like me, I'll definitely leave a comment because I'll talk to you about it. I Googled it already. It seems really cool.
Make a trip. Yeah, head out there.
So cool, everybody. Like and subscribe. Thanks so much.